So a major conflict erupts somewhere in the world, and what happens? The markets go absolutely haywire. You see red arrows everywhere, flashing headlines. It feels like total chaos. But what if I told you there's a predictable pattern to all of it? A playbook that Wall Street uses to navigate the storm while most people are, running for the exits. In this explainer, we're going to break down that exact pattern.
And look, this is the question that hits every single one of us, right? You see the breaking news, you feel the fear, the uncertainty, and that first gut instinct is to protect what you have. You're thinking, should I just get out, sell it all, move to cash, and hide? It's a completely normal human feeling.
And that feeling, it's more than just normal. It's actually wired into our DNA. Our brains are hardwired to spot a threat and run away from it. It's an instinct that saves us from, being eaten by a tiger. But in financial markets, it can be absolutely devastating.
And here's the great paradox. That same instinct to run from danger is what causes so many investors to sell at the absolute worst possible moment. Because history shows us this super clear cycle. Markets freak out, they overcorrect, and then once that initial shock wears off, they adapt to the new reality. It happens every single time.
This brings us to a really fundamental difference, a huge split in how everyday investors and the big institutions handle a crisis. It's a gap in approach that, honestly, often separates losing money from finding an opportunity.
So here's the deal. Retail investors, that's most of us, often react with our gut. We panic sell, which locks in our losses and pretty much guarantees we miss any rebound. Or we just freeze up, paralyzed by the headlines. Or maybe worst of all, we chase the things that have already shot up, like oil or defense stocks, buying right at the peak just as the smart money is quietly cashing out. Institutions, meanwhile, they're playing a totally different game. They're repositioning following a time-tested pattern.
So what is this secret pattern? Well, it's a three-phase cycle that plays out with almost spooky precision during major conflicts, whether it was the Gulf War or the invasion of Ukraine. Understanding these three phases is the whole key.
It all starts with a pretty simple chain reaction. Think of it like economic dominoes. A conflict kicks off, especially somewhere like the Middle East, and immediately there's a perceived risk to the oil supply. So traders price in that risk, and bam, oil prices jump. Since oil is an ingredient in, well, almost everything, that leads directly to higher inflation. Higher inflation means the Fed has to keep interest rates high to fight it, which makes it more expensive for companies to borrow money, and that ultimately squeezes their profits. That's what sparks the initial market drop.
And that drop can be a real gut punch. On average, you're looking at the S&P 500 falling somewhere between 5 and 7% in just the first 10 days of a major geopolitical shock. This is the moment of maximum panic, and it's exactly where most people make their biggest mistakes.
But here's the wild part. That panic, it doesn't last. In just about 35 days, on average, the market has already clawed its way back to where it started. It finds its footing surprisingly fast, often way before the scary headlines have even calmed down.
And this, right here, perfectly illustrates the massive cost of panic selling. Because fast forward 12 months, and the market is typically up around 8 to 10%. So by selling in that initial shock, you not only lock in a nasty loss, but you also miss the entire recovery that comes right after. Ouch.
Okay, so let's break this down even further. Let's look at the phases. Phase 1 is the shock. This is that immediate, emotional, knee-jerk reaction. It's fast, it's violent, and it's driven by trading algorithms and pure, raw human fear.
So how do you know you're in the shock phase? Well, these are the classic tales. The VIX, which is Wall Street's fear index, will spike above 20. Oil and gold will jump as people make that classic flight to safety. High-growth, risky stocks get hammered. And of course, the 24/7 news cycle goes into complete overdrive. The key here is not to get suckered in. Chasing those spikes in oil or gold is a classic rookie mistake.
All right, so after the initial shock starts to fade, we enter phase 2, the repricing. This is where the big money stops panicking and starts thinking. The grown-ups enter the room. The market begins to analyze the new global reality and price in the longer-term consequences. And this is where the pros really make their money. They're not guessing where the next bomb is going to fall. They're asking strategic, economic questions. Things like, is this oil disruption just a temporary blip or a real structural problem? Is this conflict going to keep inflation sticky for longer? What does this mean for government spending? And what's the Fed's next move going to be? Their answers to these questions are what determine where all that capital is going to flow next.
And that brings us to the final phase, the rotation. This isn't just thinking anymore, this is action. This is the deliberate movement of billions of dollars out of the sectors that are now at a disadvantage and into the sectors that are actually set to benefit from this new economic landscape.
So, the million-dollar question, where does the money actually go? This is the most actionable part of the entire playbook. If you can understand the historical rotation, you can start to anticipate where the big money is likely to move. And when you look at where the money flows, it's actually incredibly logical. It just makes sense, right? In an environment with higher inflation and supply risks, money flows into things like energy infrastructure, the pipelines and storage tanks that are suddenly more valuable. It flows into defense, into gold, and crucially, into companies that have pricing power, those businesses that can pass higher costs onto their customers without losing them. And money flows out of sectors that are sensitive to high interest rates, like real estate and utilities, and away from companies that depend on you and me going out and spending. And hey, don't just take my word for it. The data from Bank of America is crystal clear. 6 months after a geopolitical shock, gold has historically been the #1 performer, up an average of 19%. Oil is right there behind it. But here's the really important insight. Oil tends to be a short-term trade that fizzles out, while gold's outperformance often lasts longer, making it more of a strategic position against that lingering inflation and uncertainty. So let's be really clear about something. This isn't about making some dramatic, all-in bet on a war. It's about having a disciplined, structured approach to investing that's based on probabilities, not predictions. The goal is not to blow up your portfolio. You're not supposed to sell everything and try to time the market. You're not supposed to go 100% into defense stocks. The smart approach is to tilt your existing portfolio. You just make small, measured adjustments away from the areas of highest risk and gently toward the areas of opportunity that this historical pattern has revealed.
Think of this as your new rulebook. This is your checklist for when things get crazy out there. You keep your core holdings of quality companies because good businesses always find a way. You manage your risk above all else. You don't try to be a hero and time the bottom perfectly because nobody can. And maybe most importantly, you have to stop watching the 24/7 news cycle, which is literally designed to make you panic. You follow the pattern, not the panic.
At the end of the day, we know another crisis is coming. It's just a matter of when. The headlines are going to scream again, and that feeling of panic will feel very, very real. The only question is, what are you going to do? Are you going to let fear drive your decisions, or are you going to calmly follow the playbook that has guided smart money through chaos for decades? The choice is yours.